Ukraine considers 5 to 10% tax on crypto income to fund budget. Crypto bill. Crypto regulations. Ukraine. As Ukraine adapts to evolving financial landscapes, a fresh approach to taxing digital assets emerges, seeking to fortify state security and foster fiscal resilience amid ongoing challenges. Last updated, February 28, 2025. Author. Jimmy Aki. Author. Jimmy Aki. About author. Jimmy has nearly 10 years of experience as a journalist and writer in the blockchain industry. He has worked with well-known publications such as Bitcoin Magazine, CCN, and Blockonomi covering news. Author profile. Share. Copied. Last updated. February 28, 2025 at 20:08 GMT+2. Why Trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards focusing on factual accuracy and balanced reporting across all areas, from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. Key takeaways. Ukraine is exploring a regulated approach to digital asset profits to secure funding for state priorities. The move represents a strategic blend of fiscal innovation and enhanced defense financing. Ongoing discussions underscore the challenge of aligning investor interests with regulatory rigor. A recent report revealed that Ukrainian officials are drafting a bill to legalize and impose a 5 to 10% crypto tax by mid-2025, intended to generate revenue for Ukraine's state budget and military during the ongoing conflict with Russia. While the exact tax rates are still being debated, officials emphasize that all sources of funds, including crypto income, should be taxed. The bill's first reading is expected by the end of March 2025, and officials anticipate it could become law by summer 2025. Proposed tax rates draw concerns. In an exclusive live YouTube interview on February 26 with local news outlet Novosti.liv, Taras Kozak, president of the investment group Univer and deputy of the Kyiv City Council, discussed Ukraine's efforts to legalize and regulate the crypto market. The debate over taxation has drawn strong opinions from investors and businesses that rely on cryptocurrency. Many are open to contributing to the state budget, but the final tax rate remains a major concern. Kozak noted that a consensus is forming around a 5% crypto tax rate, which many Ukrainians are willing to pay. He further suggested that the tax should remain modest, ranging between 5% and 10%, as this revenue is necessary for state operations, national security, and military funding. However, the government is still considering a more traditional tax approach. Under standard taxation rules, individuals typically pay an 18% income tax and a 5% military levy. This means that if crypto income were to follow the existing framework, investors could face a steep 23% tax rate. Legislative timeline and challenges. Danilo Hetmantsev, head of the Verkhovna Rada's Committee on Finance, Tax, and Customs Policy, previously announced that Ukraine is on track to legalize cryptocurrency by mid-2025. According to him, the primary text of the crypto tax bill has already been finalized. However, key discussions are ongoing regarding how regulators and law enforcement will oversee the financial monitoring of cryptocurrency income transactions. Lawmakers must finalize these taxation measures before the crypto bill is formally submitted for approval. Hetmantsev predicted that the bill's first reading would take place by the end of March 2025 and the final version would become law by summer. Kozak disagreed with this optimistic timeline, forecasting that the legislative process could extend into 2026. While he believes the crypto bill may be signed by the end of 2025, he expects full legalization and taxation to take effect the following year. Uncertainty over tax compliance and regulatory control. The lack of clarity on a transition period for existing crypto investors poses another challenge. Many individuals who acquired crypto assets before the new law comes into effect may struggle to provide documentation for their initial investments, making it difficult to determine how they should be taxed. Alongside compliance concerns, regulatory control remains an unresolved challenge. Hetmantsev indicated that the National Securities and Stock Market Commission is expected to regulate crypto tax. However, there are concerns about whether this body has the institutional capacity to manage the industry effectively. Why Ukraine needs more funding for military and national security. Ukraine is pushing for increased military and national security funding, especially as its war with Russia drags on, which has resulted in severe losses in infrastructure, human lives, and financial stability. While international aid has been essential, Ukraine is also exploring internal sources of revenue to ensure financial independence in its war efforts. One proposed solution is the introduction of a crypto tax, which would generate revenue from cryptocurrency transactions and investments. Crypto's role in funding the war, Russian crackdown. The importance of cryptocurrency in war funding is evident in recent events. Recently, Russian authorities detained an unnamed employee of a diamond mining company for allegedly transferring funds to Ukrainian militant groups through crypto transactions. Ukraine has benefited from crypto donations throughout the war, with supporters worldwide sending digital assets to aid its military and humanitarian efforts. However, this has also attracted scrutiny from Russian authorities. In addition to domestic regulatory uncertainty, shifts in international politics have complicated Ukraine's financial strategies. International involvement, the U.S. shift from Biden to Trump. The geopolitical dynamics surrounding Ukraine's war funding have begun shifting, particularly following the U.S. leadership change from President Joe Biden, whose administration provided billions of dollars in military aid, to Donald Trump. Trump has previously expressed skepticism about unlimited U.S. financial support for Ukraine, and his recent meetings with Russian officials reportedly included discussions about potential resolutions to the war, which have raised concerns in Kyiv. Ukrainian President Volodymyr Zelensky was not invited to these discussions, which has fueled more uncertainty about future U.S. involvement. As Ukraine navigates its financial challenges amidst an ongoing conflict and shifting geopolitical alliances, critical questions remain. Can internal revenue sources like crypto tax realistically sustain military funding in the long term? And with global opinion divided, highlighted by figures like Elon Musk openly criticizing prolonged conflict, how might these contrasting perspectives influence Ukraine's economic and strategic choices moving forward? Frequently asked questions FAQs. How might Ukraine's new crypto tax reshape investor sentiment and innovation? A calibrated tax may boost clarity and trust in the digital market, channeling funds for defense while encouraging fair practices. However, strict limits could dampen creative expansion within the crypto sector. What challenges might regulators face when implementing Ukraine's crypto tax framework? A nuanced regulatory approach is required to balance investor interests with fiscal responsibility. Authorities must ensure robust oversight and adapt to rapid market changes without stifling growth. How does the proposed crypto tax align with broader fiscal strategies amid geopolitical tensions? A balanced digital asset levy reflects Ukraine's effort to integrate modern fiscal measures with national security priorities. By stabilizing revenue streams, it aims to sustain defense and economic resilience. Follow us on Google News. Trending news. Recommended popular crypto topics. Price predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. Bitcoin's $79,000 breakdown. What's driving the crypto crash? Bitcoin price crash. Why Trump 2.0 turned into a crypto nightmare, but there's a silver lining. Whales quietly load up on Pepe. Is a price explosion next? Altcoin news. Pi Network eyes quick 2x pump. Is now a good time to buy PI? 23 hours ago. By Joel Frank. Bitcoin news. Bitcoin drops to 3-month low under $80,000, erasing all Trump election gains. 14 hours ago. By Rahalaman Hakanaz. Altcoin news. Meme coins aren't securities, more like collectibles, US SEC confirms. 14 hours ago. By Sujya Sundararajan. Best crypto to buy now in February 2025, top crypto to invest in. February 19, 2025. By Elijah Rankovich. New crypto coins to invest in February 2025. 4 days ago. By NSS, Tavares. 8 best crypto pre-sales to invest in now, upcoming token sales. November 5, 2024. By Meb Keeley. 10 new upcoming Coinbase listings in February 2025. February 5, 2025. By Isan El Makuri. 12 new and upcoming Binance listings in 2025. February 19, 2025. By NSS, Tavares. Next crypto to explode. Top 12 coins in February 2025. September 11, 2024. By Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2034. October 19, 2024. By Leon Waters. Ripple, XRP, price prediction 2025, 2026 to 2030. August 28, 2024. By Eric Huffman. Ethereum price prediction 2025 to 2030. Will ETH reach $5,000? August 28, 2024. By Ben Beto.